This is the Millionaires Roundtable. I'm your host, Lynn Richardson. We are creating millionaires one family at a time, one day at a time, $1 at a time, one dime at a time. And that means you. This is the Millionaires Roundtable, and I am your host, Lynn Richardson. We are creating millionaires one family at a time, one day at a time, $1 at a time, and one dime at a time. And that means you. Yes, you. Today, I'm going to talk about a stair step that's very near and dear to my heart. As a matter of fact, it's the single most important step in the equation. Now, you certainly cannot become wealthy without the other steps. You need the other steps in place. You need to live below your means. You absolutely must eliminate your debt so that your money can start to work harder for you, because money will work harder for you than you can ever work for it. Everybody needs a home-based business. And yes, you must plan for retirement. Step 5 is about protecting everything that you've built. We're going to talk about insurance and estate planning. You see, the first thing that you have to realize is this. Life insurance is the single most effective and certain way to guarantee that you will leave a legacy, not only for your children, but for your children's children. The Bible says that a good man, a good woman, leaves an inheritance to his, her, children's children. I've been practicing in the financial services industry for over 2 decades. And the one thing that I know about cultures who historically, categorically, and generationally build wealth is that insurance is a key factor in their entire financial strategy. Yes, it's great to go out and make a lot of money. Yes, it's great to go nail down the job of your dreams that's also paying you well. It's even more wonderful if you have not only one home-based business, but if you have multiple streams of income. That's great. But if something happens to you, if you are the breadwinner in your family and everything stops, or if someone in your family is the breadwinner and they pass on prematurely, now let's be clear. Death is going to happen, and all death is premature. My grandmother passed at the age of 98. I was devastated. I thought she lived to be 120. It's what I believed. So no death is expected, but it's certainly going to come. So let's think about how life insurance works. The first thing I want to say is this. I've been grinding for a long time, just like you. I've been out here hustling, making it happen, finding opportunities, landing in them, building, losing, rebuilding, just like everybody else. But let me tell you the one thing that gives me not only joy, but it gives me a peaceful slumber every night, a peace that surpasses all understanding. And that is knowing this. If I didn't wake up tomorrow, my husband, my children, my parents, my husband's parents, my businesses, everything that I love right now would still carry on financially. If something happened to me, there's an estate plan in place to ensure that the life insurance policies are distributed as I wish, that the finances are distributed as I wish. It's called an estate plan. It's separate from a will. A will goes into an estate plan. But let me tell you the issue with only having a will. A will can be contested. Let's say you have a will and you leave your paid off home in your will to your children. If some other miraculous children pop up and say, well, I'm a child too, it happens. Then that will is going to be contested in probate court. And guess who has to pay the expenses for probate court? You're not even here. but your asset that you left has to pay for those court expenses. I've seen cases where people have passed on, and unfortunately, there's a fight over what's left over. And by the time the fight is over, the 100,000 or the 100 million or the 50 million or whatever was left in that estate, it's dwindled away to zero because of court expenses. So you want to have an estate plan. An estate plan is essentially a business plan for your money when you are no longer here. More importantly, an estate plan is a business plan for your money, your assets, and your resources when you are not in a position to make those decisions for yourself. My good friend and attorney, Deidre Wood Stokes, she and I wrote a book together on estate planning. She from the legal perspective, me from the perspective of someone who has been the recipient of what a good estate plan can do for your emotional and your freedom health. What is your freedom health? That's the power in which you operate in freedom. And she shares this story of a mother and daughter. Each was the other's beneficiary on their life insurance and in everything in their estate. And the mother's sister said, hey, we need to look at your estate plan. She said, oh, no, I'm good. If something happens to me, everything goes to my daughter. If something happens to my daughter, everything comes to me. So we're fine. Well, unfortunately, the mother and daughter were driving and they were in a fatal car accident. When they were taken to the hospital, technically, the daughter passed first, but the doctors did not pronounce her as being deceased first. The doctors pronounced the mother as being deceased first because when they got to the hospital, they were able to still work on her. So they pronounced her deceased at, let's say, 12 o'clock. Then they went and pronounced the daughter deceased after that. So here's what happened. Because the mother was deceased first on paper, all of the mother's assets then went to the daughter. When the daughter was pronounced deceased after that, guess where all of her assets went? Because her estate plan or her life insurance only said that her mother was the beneficiary and the mother was deceased, then all of the assets went to the daughter's father, who had been absent from her life for well over 30 years. So the people who she loved, her aunts and uncles and her grandparents and her nieces and nephews, there were causes that they both cared about. The father, who had not been in her life for over 30 years, inherited her entire estate. But not only did the father inherit the daughter's entire estate, the father inherited the mother's entire estate that was left to the daughter, who then was announced deceased. So here's the thing that I need everybody to understand. People don't die in chronological order. You never know who, when, where, or what the hour is. So minimally, have enough life insurance so that your children can continue on without your income. We all know that if something happens to any one of us or to someone we love, grief is going to take over. But grief does not have to be accompanied by poverty. The grief is no choice. Poverty is. So on these stair steps to wealth, as you live below your means, as you eliminate your debt, start your home-based business, and plan for retirement, you must now protect everything that you created. You need life insurance. $50,000 is not enough. A burial policy is not enough. As a matter of fact, I told them, well, nobody's going to be here when I pass. I'm going to outlive everybody. But the whole point is, don't even give me a casket, okay? Who wants a casket for $20,000, $10,000, $5,000? I'm not even here, okay? Burial policies, that's outdated. That's old school. You need enough life insurance to pay off that mortgage so your spouse and your children or whomever can still live without your income. They're already grieving. They're going to need time to recover. Have enough life insurance. I had enough life insurance so that my estate would then give my children and my husband an allowance. It would also give my grandmother's nursing care facility enough money for her to be taken care of, not just my grandmother, but my mother and my father and my husband's mother and father. So the estate is able to do the things when you are no longer here that you would have done had you been here. Here's the other thing. What if you become incapacitated? What if you go into a coma? What if you have some kind of accident? You live, but there's a specific or a certain amount of time where you can't make your own decisions. An estate plan comes into place there also. So not only do you want to build your wealth, you also want to protect your wealth. This is the Millionaires Roundtable. I am your host, Lynn Richardson, and we are creating millionaires one family at a time, one day at a time, $1 at a time, and one dime at a time. And that means you. We'll be right back.
Meet Lynn Richardson, celebrity financial expert. You might have seen Lynn on Good Morning America giving financial advice. For more than 2 decades of having leading roles in the banking and real estate sales industries, Lynn has helped clients face their money issues and achieve their personal, professional, and financial goals. Lynn is committed to using her financial expertise to benefit others. She's helped thousands of clients get out of debt, start home-based businesses, and create multiple streams of income. To learn more, please visit lynnrichardson.com, where financial dreams meet focus to generate wealth. Check out Tax Talk Thursday with Lynn Richardson as she and her special guests give tools and tips to help us better understand the state and federal tax system.
Just give us something that we can use to get those who have never understood the tax system and how it works.
We have 2 tax systems in this country. And when I say that, I always have people say, oh, sure, one for rich and one for poor. That is not true. That's a myth. There's one to make you rich and there's one to take your wealth, basically.
Learn how to get greater tax returns or learn how your business write-offs can lower your taxes.
It's more about how much money you keep than it is about how much money you earn, right?
Yeah.
Would you rather earn $2 million and end up with $1 million, or would you rather earn $1.25 million and keep it all?
We are creating millionaires one family at a time, one day at a time, $1 at a time, and one dime at a time. And that means you.
Tune in to Tax Talk Thursday on lynnrichardson.tv.
Share and subscribe. Welcome back. This is the Millionaires Roundtable. I am your host, Lynn Richardson, and we are creating millionaires one family at a time, one day at a time, $1 at a time, and one dime at a time. And that means you. Guess what's most exciting about wealth? It's guaranteed. It all depends on the choices that you make. That's another thing that gives me an incredible amount of peace when I go to sleep at night, and an incredible amount of power every day that I get up and I wake up and I go out and I grind again. Because I'm in a win-win situation. I win if I keep grinding and achieve my goals. And I win if, unfortunately, something happens and I'm not here. Because either way, living below my means, stair step number 1. Eliminated my debt, stair step number 2. Started a home-based business, multiple home-based businesses, stair step number 3. Started my retirement fund, so I'm headed in the right direction with my SEP and my mutual funds and my stocks, and my entire portfolio is diversified. Yours can be too. Step 5, protecting all of this with insurance. That's right. So here's the thing about insurance. It's the thing that nobody wants to have until they need to have it. Nobody wants to pay car insurance until you need it. Nobody wants life insurance until someone passes. Nobody wants any kind of insurance until they need it. So right now, I'm going to tell you to make the investment in your next generation. Make the investment in the things that you love. One of the big questions that I get is, what if I don't have any kids? What if I don't have anybody that I care about? What if I don't have anybody that I love? You love something. What do you care about? Is it some kind of illness that you want to see cured? Well, leave your wealth to that fund. Is there a wing in the college that you attended that you'd like to see rebuilt? Would you like to put a library in your old school? Would you like to build a community center in a neighborhood that you grew up in? Do you want to help feed the homeless? There are so many things that you can do with your wealth after you're not here and make a difference in the lives of others. A good man or woman leaves an inheritance to his children's children, and that's not just the children that come out of your own body or from your own seed. You see, we are responsible for each other. We work better when we work together. We work better when we're linked arm in arm. And one generation should not have to suffer the same illnesses, the same struggles, and the same consequences that the previous generation suffered. Now, yeah, there are some things that go from one generation to the next, and there are some social ills that we will probably have to deal with for quite some time. But if you know better, do better. And if you can do better, then help the next person be better. So we've talked about life insurance. The one thing you don't want to do with your life insurance is simply have a beneficiary and say that's it. Let me tell you why that's no good. Let's say you're a single mom. You love your children. You're no longer with the dad, or let's say you're single dad. You love your children. You're no longer with the mom for whatever reason. And you decide, because you love your child so much, you're going to get this insurance policy. You're going to leave your money to the child. Well, the first thing is this. If you don't have an estate plan and your child is the beneficiary and something happens to you and they're 6 years old, 7 years old, 8 years old, 10, they don't get access to the money until they turn 18. So what happens to them from 4 to 18 or 11 to 18 or 13 to 18, whatever? Probably not good. But here's the second part of that. And I've seen this happen so many times. What happens when they turn 18 and they get this big lump sum of money? You know what happens. They spend it up, smoke it up, give it away, get whisked away by a lover. Let me tell you, it usually does not end well, because an 18-year-old, in most cases, is not capable of making wise decisions that lead to a healthy, long, living, lasting, wealthy future. So one of the things I say to people is this. If you're 40, happy birthday. And actually, this is your first day of living. Because the first 40 years of your life, first of all, the first 20, you didn't know anything. You definitely didn't know anything from 1 to 10. Then you were a teenager. You knew nothing then. And then you were 20 to 30. And your 20s, let me tell you something. You don't know anything. Then you get into your 30s and you learn from all the things you did wrong in your 20s. And finally, by the time you're 40, you're like, okay, let's do this all over. That's why it's never too late. You know, people call me all the time. They say, Lynn, well, I'm 50 years old. I don't have anything saved. I don't have any money. I was like, congratulations. Because the life expectancy is well over 80. So if you're 50, you've got 30 years to do it right. That means the time from 20 to 50, 30 years that you did it wrong, take all that time, add your experience, multiply it by your wisdom, and now you can be financially free. So that's life insurance. If you have a life insurance policy, you must have an estate plan. Now let's talk about your business. In your business, you need liability insurance. In case something happens to someone while you are doing business, conducting business, you want to ensure that if your business is sued, that your business has proper liability in order to handle that lawsuit. But here's the other reason why you need insurance in your business. Let's say you've got a business and there's a key person in your business who makes it successful. I am a key person in many of the businesses that I'm a part of. I run companies for entertainers and so on and so forth, and they are key people in the businesses. If the person stops talking, singing, dancing, or acting, or whatever it is, guess what? The business is over. So in every business that I'm a part of, we have key man insurance. That's right. If something happens to the breadwinner, if something happens to the operations person. If something happens to the strategist, then you've got to replace that person. But not only do you have to find the person to replace the person, you're probably going to have to pay them a lot more money because the learning curve is short and you need them to go all in. Or you might have to find 2 people. I've been told it would take 10 people to replace me. And I believe them. Some days I feel like an octopus. I'm in front of the camera. I'm behind the camera. I'm the president of the company. I'm signing the papers. I'm handling the finances. Then I got husband, children, all these things I have to take care of. The truth is, if something were to happen to me in any of my businesses, they probably have to get 2 or 3 people. So key man insurance protects your business from falling apart when the key decision makers, strategists, and income owners, if or when those people are no longer part of the equation due to premature death. The other thing that you want to handle in your wealth building and protection strategy, of course, is proper insurance of your assets, your car, your automobile, your notables, your collectibles, and of course, anything that is of value to you. Insurance is your friend. There are 2 things that you don't want to have to get after you need them. I always tell people, listen, pay your attorneys. It's much better to pay an attorney before you need them to stay out of trouble than to pay an attorney to get you out of trouble. It's much cheaper to pay an attorney to stay out of trouble than it is to pay an attorney to get out of trouble after you've done the wrong thing. Pay your attorneys, that's protection, and pay your life insurance. So I know this topic always brings up tons of questions. So let's see what questions we have out there from our callers.
Hi, my name is Pam.
Hi.
And as a young single mother, I'm wondering, how soon should I invest in life insurance?
Oh, excellent question. You should invest in life insurance as soon as you know how to spell the word. Okay? If you are purchasing life insurance for yourself, you should invest in life insurance. So if your parents purchased life insurance for you prior to you becoming an adult, then you have acquired life insurance when you're young and healthy. That's the best time to get life insurance. If your parents did not purchase life insurance for you before you became an adult, your first job, straight out of high school, straight out of college, get a sizable life insurance policy. Get as much life insurance as you can, because you can't just walk into the insurance company and get $200 million worth of life insurance. They're going to say, you're not even worth $20. Okay. What do you need $200 million for? All right. Yeah. So you can't just go in with some arbitrary number. There are rules to this game. I always tell people to learn the rules of the game and then play the game by the rules. But certainly if you are a millennial, a young person in your 20s, 30s, 40s with a lot of potential, creativity, home-based businesses, ideas, then you certainly could qualify for some reasonable number. I would say starting at $250,000, $500,000 for a term life insurance policy. That's what I believe. Buy as much life insurance as you can for the least amount of money, as young as you can, in your healthiest possible state. Then when you start having children, ensure that you update your estate plan. Do you know how many people are walking around with life insurance policies and they're no longer married to the person? They're no longer dating the person. They don't like the children anymore. Whatever. Yeah, take your children off your policy if you don't like them. Okay. Put them in your estate plan. Yeah, I tell people, listen, just because you're my child doesn't mean you're getting anything. All right. Somebody might get a letter. You see, here's the deal. In wealthy communities, at the funeral, on Monday, they have to go to the lawyer's office to talk about the estate. When poor people die, we go to the repast and we eat a steak, S-T-E-A-K. There's a difference between the two, all right? And so while death certainly is not something that anybody wants to deal with, the truth is it's like taxes and your race. I'm going to be black and die. There's nothing else I can do about those 2 things. Now, I could go get my skin colored. I'm still black. All right. I could take vitamins forever, and one day I will no longer be here. So because those things are going to happen without fail, We want to do what we can while we can to have control over the consequences after the event occurs. Remember, knowledge is power when it's put into action. Knowledge is power when you do the thing that you've just learned. This is the Millionaires Roundtable. I'm your host, Lynn Richardson, and we are creating millionaires, one family at a time, one day at a time, $1 at a time, and one dime at a time. And I'll see you next time.
Now stay tuned for a sneak peek of Wealthy Wednesday on LynnRichardson.tv. People straight on that.
Let me tell you. So for those who don't know the 10, 10, 30, 50, first of all, you can get all the details in my book. Don't forget to subscribe and share, all that stuff. But in Living Check to Monday, I broke it down because I was making $50, $60, $70, $80,000 a month. I was still broke. And so I started actually following the rules, which are the truth. So the first 10% you tithe, the next 10% you save.
Yes.
The 30% is cash in your pocket. Cash for your incidentals, like groceries, gas, hair, nails. If it doesn't fit, get rid of it. And then the remaining 50% stays in your checking account for your bills. If you have more than enough money, that's not a license to go buy a lot of stuff. You want to get rid of your debt. If you don't have enough money, then you have to subtract.
And I was like, oh my God, this makes so much sense.
Yeah.
And I think people can appreciate, especially, I've been with you many times when you've spoken live to, thousands of women. And when they hear that breakdown of 10, 10, 30, 50, and you go into each and why it's important, it feels like they just ready to get loose. It's like, oh my goodness, this is what I've been doing.
People are free. So if you don't put your appointments in your calendar, you'll be one place like, oh, I forgot about that. So we just call it a schedule. We keep it clean. We keep it easy. So I want everybody on this Wealthy Wednesday, Light said it, people hear it and they're like, oh my God, that's freedom. This is a freedom series. This is about you going to the next level. The 10, 10, 30, 50, the first 10% you tithe, the next 10% you save, 30% cash, and it's to help you avoid a spending addiction, which is what you have when you go to the grocery store for toothpaste and you walk out with $179.47 for the stuff you don't need. We're going to talk about that on another Wealthy Wednesday.
Share and subscribe.
Meet Lynn Richardson, author, entertainment executive, TV personality, and celebrity financial coach.
Please say hello to financial expert, my girl, Lynn Richardson. My buddy, finance expert, Lynn Richardson.
Hey, everybody.
Why do you need Lynn's help?
She uses her quick wit and humorous presentation style to help others face their issues and achieve their personal and professional goals, as well as spiritual harmony.
So I tell our sisters, you go to a rack, $500 purse. Self, do you usually have $500? $20 purse. Self, that's usually how much you got. That's the purse that you get off the rollback rack.
In this current economic crisis due to COVID-19, Sean Diddy Combs invited Lynn Richardson to contribute to his new website, OurFairShare.com, in which Lynn explains the Paycheck Protection Plan that assists small businesses in gaining access to U.S. government funds. Over the last 20 years, Lynn used her financial expertise to create a curriculum of books and online classes to help clients achieve financial freedom. Lynn teaches clients how to get out of credit card debt, shows them how to start a home-based business, and to create multiple streams of income. Lynn Richardson is a celebrity financial coach and founder of the 700 Credit Club. Lynn wants to talk to you about one of the biggest issues that can separate you from your financial freedom, and that's your credit score. Lynn overcame 2 bankruptcies and foreclosure, but with this plan, her score is now over 700, and she's inviting you to join the 700 Credit Club today. Here you'll learn to build your credit and have the financial freedom you dreamed of. For more information about the 700 Credit Club, please visit LynnRichardson.com.
Hi, I'm Lynn Richardson, and I'm excited about teaching you how to build multiple streams of income. But more importantly, I'm excited about teaching you why. I'm a financial expert, but I think there are some things you need to know about me that you'll never read in a newspaper or magazine or see anywhere. I was born and raised in Chicago.